So, well, thank you all so much for joining us on TMC Connect today. My name is Tony Bramley, and I'm the Business Development Coordinator here. We have with us Drew Stachek, and he is with First National Bank of America, FNBA, one of our co-members. So they're a lender member as well as a preferred partner, but they're on the correspondent side, and wanted to talk today about how to increase your borrower's reach. So I'm going to first of all, let's do a little housekeeping. Wanted to let you know that everyone has come in on mute. So, but we do want this to be interactive. So please drop your questions in the chat, and we will take those up at the end of the presentation. And wanted to just say thank you for your time today. There will be a follow-up email that comes out to everyone who's registered for this session, and there'll be a link to a YouTube video of the session in that email. So once again, thank you so much for your time. And with that, I'm going to turn it over to Drew.
Thank you, Tony. I appreciate the intro and the relationship with TMC. Definitely, we were able to get out and see them in the Terranea for their conference. That seems like a little bit ago, but it was just a few months ago. So that was great to see everybody and meet everyone in person. So thanks for having us. And yes, Drew Stachek here with First National, and here to talk today about how we can add value to your lending operations, really with our non-QM product suite. Kind of go high level over that, what we can offer on a non-Dell kind of correspondent sort of relationship. Keeping in mind as well, First National is a full service operation in the sense that we do have a retail and wholesale, broker channel, as well as a scratch and dent outlet. If you do, God forbid, mess up a mortgage and it doesn't get securitized or it's a Fannie and Freddie, we know, we hate to see it happen, but we are a solution for that as well. We, offer competitive pricing. Tony and I were just talking about for those loans. So we try to get you as much as we can, and the service we provide on those is second to none. We have very quick turn times and ability to buy those loans as well. So just a quick kind of high overview of what First National can bring to the table and to help, really you out in a lot of different ways. With that said, I'd like to go ahead and I'll share my screen with everybody and kind of go over a nice little presentation of First National, who we are, and who we can help in terms of borrowers, and when you're out talking to realtors and things like that, when you're trying to generate more volume. As we know, some of the refis are starting to dry up, rates are starting to creep up. So if you are looking to focus on primary purchases, second home purchases, with those borrowers, and typically more diverse communities, we're a great solution for that. So let me go ahead and get this going. Appreciate your patience. All right. So First National Bank of America, we've been around since 1955. We are a portfolio lender, and I'll get into that in a little bit. It does give us some competitive advantages for sure in the non-QM secondary market space. So we've been around since 1955, and the good news is all First National has done in its existence is non-QM, in the sense that trying to make common sense loans to people that might not have access to the debt or the ability to get mortgages here in the US. What is non-QM? So I know when we were out, when the FNBA team was out in California at that beautiful resort in Southern California a couple months ago, we talked to a lot of lenders, a lot of members of TMC. Some of you that might be on this today, or hopefully will be able to see it if you can't make it. There was quite a bit of education that I could sense, and I could tell that really needs to happen about non-QM. Again, who does it help? how can First National fit into that piece? And generally, and as simply as we can say, non-qualified mortgage, that's what non-QM stands for, is just strictly a borrower who needs to document, their income in a different way to get approved for a loan, typically that being a self-employed, borrower. So, non-qualified mortgages is anything outside of the agency, a particular, product mix, as well as, government loans as well. Those would be QM. This is non-QM, and basically this is all other income methods, specifically for self-employed people. Now, you might say, if you're a lender, right, and if you're thinking about bringing on non-QM as offerings for your LOs to be able to go sell, you kind of have a built-in pipeline, as it were. If you have runoff for whatever reason, you can get these loans, your runoff loans approved because of DTI, or there was some sort of credit history that may have happened, or the collateral for whatever reason fell out. First National can be a buyer of those loans. If you do have some hardworking LOs that want to go back through the pipeline and figure out, how they can remarket some of the borrowers that the government loans or the agency loans didn't work for, we're a perfect solution for that. DTI being one of the easiest ways we can get loans to work. Now let's focus on the actual borrowers. ITIN borrowers for First National Bank of America, and I can't really stress this enough, this is our main borrower class. This is the type of borrowers on these non-QM loans that we see all the time. We've even got used to calling them ITIN products. They're not really ITIN products. They're just ITIN borrowers that go into a certain non-QM product, but that's okay. ITIN borrower, as we were to define it, would be, someone living here, working in the U.S., that has a valid ITIN number from the government. They can come from all over, and we'll show another slide of typically where these individuals come from. But this is a great business for First National, and it can be for you too. Typically in diverse areas with multiple languages, particularly Spanish, which is a rising demographic for home buyers, as we all know. So the ITIN product is very niche, but very valuable, especially with earning relationships with realtors and then expanding your network, kind of from there once you get a few of those loans closed with us. And then, of course, naturally, self-employed borrowers. With our income options that we'll go over, you really don't need to see any borrower's tax returns. So this is the advantage of using a non-QM loan. You don't have to document income the traditional way. You don't have to use W-2s. You don't have to use tax returns. Frankly, you can use a P&L, 12-month year-to-date with us. You can use bank statements to get approved with us. You can use our ready asset program, our asset depletion program. So we do have the traditional non-QM suite for income to get your borrowers approved for homes, to buy homes. Also, lastly, previous credit event. If you have borrowers that have been through bankruptcy or have just getting out of foreclosure or went through one a year or two ago, we can look and buy those loans, look at and buy those loans. So anybody or any persons that may have had damaged credit in the past for whatever reason, we can be a home for those loans as well. So I touched on ITIN, the first part of the borrower segment there that we really do focus on, and a lot of our lenders focus on. As you can see here, here's kind of a breakdown on where those ITIN borrowers are coming from. As you can tell, most of them from Mexico. We do have a large contingent that are actually Portuguese and from Brazil as well from India. So, ITIN doesn't necessarily clump everybody into this, 70% Latino category, but, they can be from all over the world. As long as they get that valid ITIN number, we're good to go. And that is unique. From a portfolio lender perspective, we can do these loans in a much more aggressive and more liberal guideline stance on a lot of these that make us so much more competitive and frankly easier to work with on these if you do want to create some yield spread. And we'll touch on some of the capital markets, advantages we give our partners as well. Now, self-employed, really how we look at this is there's a lot of them that are getting turned away probably every day that go in to try to get pre-approved or try to get a mortgage. I hear from retail LOs and brokers all the time that self-employed borrowers, they're tough. You need 2 years tax returns to go gubby, et cetera, et cetera. Non-QM, you really might want to think about it for those borrowers. And we do believe that that market's going to grow even more given what happened with COVID. And then as a result, coming out of COVID, we expect many more self-employed individuals. Credit events, just to briefly touch on that. Again, bankruptcy, foreclosure are something we can do. So if you do have, some borrowers that, you have in mind that have had this, sort of damaged credit in the past, give us a call and we'd love to talk more about that. DTI, this is a big thing that comes up with all lenders. First National, most times than not, can go all the way up to 55% debt to income ratio on all loans. So as we indicated, most lenders, most investors, most products, you can only go up to 43%. A lot of times you can get to 50 with us, if not the full 55. We try to make it as easy as possible to get approved when it comes to income or ATR on these loans. Just as transparent as I can be about that. We really are trying to get as much income as we can on these loans, and then hence the DTI requirements as well. Now, with us, it's all 12-month, 12-month year-to-date P&L, 12-month bank statements to get you approved on our bank statement program. Last year's tax return, last year's W-2 for a full doc sort of situation, get you approved with us. So limited income review history. We don't have to go back to 2 years, especially what has been going on. Just keep it 12 years. That said, if you do have to extrapolate or go out for 2 years for a self-employed borrower to make those averages work, we can do that too. So, that is an option. And just to briefly touch on, if you don't have these options available right now for your borrowers or your LOs, frankly, you might want to think about it. Profit and loss being our most popular program by far. That's a 12-month year-to-date P&L. It just has to be attested to by a P10 or a valid, tax preparer that's, current with the IRS with keeping their credentials up to date. Very popular. We don't have to see any tax returns, no bank statements outside of assets for 2 months, just a 12-month year-to-date P&L. We also have our bank statement program, which is really slick, upfront pre-approval. Really all you need are 12 months bank statements and a questionnaire form. We're going to give you approved income, before the borrower even has a home picked out, so you know exactly how much home they can afford. That's a quick process here with FMBAs. So the bank statement program, we've been gaining a lot of traction on as well. And then the traditional, asset depletion, it's always there. You can actually add that on top of a W-2 employee if you need more income to drive DTI down. Asset depletion is there for you to use. Ready asset, if you do have individuals that, have the assets, that's all we need to see to get approved for the loan from an ATR perspective. We don't need to see any other income docs. That's a pretty nice program too, and really the most simplistic one we have. And then traditional methods, you'll find what we specialize being that it's ITIN, you're going to find a lot of full doc ITIN W-2 employees that get paid pay stubs, etc. That's fine with us too. You can have traditional methods, tax returns, W-2s with us, and keeping in mind, you can have a borrower with an ITIN as well as a borrower with a SOCH on the same loans and mix and match these incomes for each, if one's self-employed and one's, W-2, whatever it is, you can use any of these for ITIN and or SOCH. So keep that in mind. We'd like, again, keep very flexible, very easy to use income on these loans to get your borrowers approved. Gift funds. We got to touch on gift funds. One of the best things I like to talk about because very important to our business. Gift funds with us, we treat those a little different. All we need, is a gift letter with a transfer date, and that's it. You'll find in the ITIN community, a lot of these mortgages have gifted funds on them. We can go up to 100% gifted funds in most scenarios. So keep that in mind. We are very easy to work with when it comes to gift funds. I like to think best in class, very simplistic, very straightforward. There's really no gray, with that program. And again, on most of our programs, when it comes to LTVs, et cetera, there's no rate hit for gifts. There's nothing like that. 100%, accepted. The borrower's just going to have enough cash to cover closing costs and things like that. The loan gets through. So gift funds, again, I can't stress enough how important these are, not QM in general, but specifically with the I-10 borrowers as well. And here we go. Just a nice little recap here. And I will touch on turn times upfront review process. So the upfront review process with FMBA is unique in the sense we understand there's quite a few outtakes now for non-QM. Pre-COVID, non-QM was picking up, securitizations was ramping up for the industry, which is great to see. COVID threw a wrench in that. And a bit of a curveball. And now that's just now starting to come back in earnest with funding and more of a correspondent relationship being available with more warehouse banks funding these lenders to be able to close these by themselves. That said, First National takes away a lot of the risk when it comes to our non-Del channel for you, the lender. And what I mean by that is we have a very upfront review process where you have to give us a credit file where we'll issue a conditional commitment, a commitment to purchase based off the credit file, and allow you to build that file along the way, and then get us information at when you have the appraisal, when we do a final sign off. So the non-Del channel is such where it really should get the best closing times, the quickest closing times, and create the best efficiencies for you as an operation to control as much as the loan process as you want, really, with drawing docs and getting in process and et cetera, while allowing FMBA to really underwrite for that purchase decision and really understand the loan and make sure it's something that we're going to want. Because once we issue that final commitment to purchase, or CTC, after reviewing all the file, you're going to know FMBA is a buyer, and all you have to do is go close that loan. So it's a very secure process to get the loan, kind of pre-approved with us, really. And then finally funding it, our purchase times are within a day or two of getting that collateral note and being able to review, the closing docs. So incredibly easy to work with our upfront process. And then fast turn times. I mean, everybody, in this industry, it's go, 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 quick, quick, quick. We love our operations. They've done a great job. We're on a new online investor portal, automated system. So our turn times have rapidly increased. We're at, business day to 2, no longer than 3 business days to get responses from us, whether it be initial review, whether it be a final review. We are very quick to getting these files in, reviewed, and then back out to you, the lender. So you know where to go, what to get, and keep that moving so you can reach your deadlines, reach your PA closing dates, keep sellers happy, keep agents happy, et cetera, et cetera. We try to provide the groundwork and the platform for ultimate success when it comes to all those things. So the fast turn times are really, really the key to that, right? Foundation, you get us good data in, we review it quickly, accurately, give you feedback, and that back and forth should really be seamless to get you to that close, to get you to that funding, get everyone paid, and then get it on our books, which is ultimately the end goal. So feel free to visit us on our website. It's fmba.com/correspondent. I will say a good place to go if you want to play around with some scenarios, on borrow scenarios, stuff like that. You can access our marketing flyers as well. That'll give you nice overviews of the different programs we have. I-10 program, we have some content, some Spanish content online as well. And then we do have our ATR section where it's going to give you high level attributes on each income method to give you a good idea when you are talking to your borrowers, or you are trying to get a sense of what, how you can help this particular self-employed borrower. Just skim through a couple of nice flyers, boom, you should have your answers to be able to move that file forward. So please check out the website. It should have a lot of valuable things for you there to look at. And then there's me, happy always to talk through how we can continually, hopefully, provide value to your lending operation. Again, whether it be non-Del core, whether it be through our resi, our wholesale channel, or our retail channel, and of course, our scratch and dent operation as well. We are here to talk and hopefully being able to help you all close loans quicker and more of them, right? That's what we're here to do. So, you can reach me, there's my phone, my cell. Office phone gets routed to my cell, so it doesn't really matter anyway. You should reach me either way. Then, reach out to me on LinkedIn as well. Happy to chat and hopefully get some investor products to some of you lenders out there. So with that, I will pause, come up for some air, maybe get a drink of some water there, and see maybe if there's a question. I don't know, Tony.
That's great, Drew. Thank you so much. I mean, you put it into such a great package for reaching borrowers and reaching more borrowers with non-QM loans. One of the questions that I have is, lenders who are looking for an investor for non-QM and I-10 loans. What's the best practice for them to determine who they should be working with?
Sure. So it's a great question. Hopefully more and more lenders are going to be asking that question, right, over the couple, coming months. And when they start looking at numbers and overall production, they're going to have to, kind of justify some volume some way. When they're out looking for non-QM investors, now, we are a unique investor. And I have to highlight that kind of right out the bat and be as transparent as I can about that, in that we are a portfolio investor. So it gives us some competitive advantages, frankly, over everyone else out there, as well as some disadvantages. Mainly the disadvantage, I'll just get right out in front of it, would be rate. Our rates are usually going to be a little higher than any other non-QM rate. But I have to say it because, that's mainly pretty much our only, disadvantage, I would say. That to be said, being a portfolio lender, our guidelines are typically more liberal, or you're able to figure out or fit more borrowers into our products, let's say, because it is more common sense with us, and we can make exceptions very quickly because we have direct access to the people who are responsible for these loans performing on our portfolio books, right? So it's a much kind of more seamless way to get to a quicker answer on a more let's say exception level based loan product, which, let's face it, non-QM, a lot of these loans are exception level based, and it takes some thinking and some common sense application to these loans because you're not passing them through AUS. You're not doing automated underwriting on any of these, right? So these are all manual underwrites, and it does take a higher level, and I'm going to say this, sophistication to sometimes be able to get these loans through. So that said, First National is a great investor in that case. We've only been doing these. These are the only products we've ever been doing, so we're very versed at them. And additionally, we have to live with them, so we're very comfortable making exceptions if the loan makes sense. So, Tony, that's the main way we can kind of set ourselves apart, maybe from the rest of the investors. Another way too is when COVID hit, every investor outside of, I think, 2 or 3 fled the non-QM space as a secondary market investor, right? First National was not one of them. We stayed. Right. So all of our partners that were able to stay, keep their warehouse lines producing non-QM, we were still buying them at premiums. Okay. And I believe we were one of the only investors to do that. So when you want to talk about partnership, okay, if you want to talk relationship, and I get the Morgan, it's very basis point centric, it's very margin centric, but two, it's service oriented. Right. And that's a big part of it. And that's where, frankly, First National really shines is our service. We might not pay the most, but we will give you the best service. There's no question about that. And I think that goes a long way. And as more lenders start looking for investors, you might want the best price, but are you going to want to deal with the headaches and the back and forth and potential delays and cancel closings? I don't know. That might cost you more money than you could getting with us, right? So these are decisions you have to take a step back and really think about. As rates to continue to go up, we will be more competitive in margin, and that's just natural. So keep that in mind. But I would say our service 100% allows us to stand down and give me confidence, in doing these and talking to partners and going to, conventions and stuff. And really, they do back it up, right? Quick turn times, and, we'll reach out, communicate very, very effectively, we feel, with you. So then I say the third thing that helps us stand out is we are one of the only national outtakes for I-10. So if you are looking to generate yield spread, and bring I-10, the product of I-10 or borrowers in-house, be able to control a little bit more as opposed to brokering it, and then originate, on your paper and realize that additional yield spread. So you can charge points of fees up front, get paid premium on the back end. So from a capital markets perspective, we can actually, build value around these ITIN loans. And nationally speaking, we're one of the only one or two that can do that right now. So I'd say if you do have a Spanish speaking contingent of LOs, Spanish speaking talent, diverse talent that works with realtors in these spaces, we're a natural fit, to be honest. We're coming out with Spanish content every day to help support our lenders, to help support our partners as well. So we're very focused on that part of the business. So I'd say that's really the third way we can stand out. If you do want to add these niche ITIN products, or non-QM products, great partner to kind of get your toe wet, if you will, and kind of get into it, because we do come out and we meet you. We come out and train you. We do try everything we can to set you up for success from an operational standpoint, from a pricing standpoint, and from a sales standpoint, as a second market investor.
Excellent. Well, thank you. We have another question that came in. This one's kind of a three-parter. So I'll just read it off, and then you can take it in its segments. Can you please describe the P&L document type? What does the P&L look like, 12 months total or by month? And then what is the language that is required by the PTIN or the CPA? How is the income calculated?
Sure, all good questions. So our P&L, we do have a template, right, that we can give to our lenders that can be filled out. It's a very simplistic P&L template, though. It's just a 12-month year to date, right? So that's what we need. So for example, we would need an October, 31, 20 to October 31st, 2020 P&L if we're using it for this month, right? So that to us would be a full 12-month year to date P&L. That can be borrower prepared. It does not have to be in our template. It can be a P&L, prepared on somebody else's template or whatever it is. It has to be 12-month year to date. Now, we do have specific language that's on our template that we prefer that CPA or P10 tax preparer to sign off on. It basically has language that they are attesting to the accuracy of the P&L, right? They're just saying, yes, this looks accurate to their typical cash flows throughout the year. I'm comfortable signing off on that, right? And that could be a separate piece of paper that they write out, a letterhead, a CPA letterhead or something like that, or it can be physically on the P&L as well. On our P&L template, there is a space for them to sign with that language there. So if you're interested in that, we're happy to share that template and give you an idea, obviously, of what we're talking about here. But very simple is what we need is just to attest to the accuracy that income's good. It's a third party, just confirming, yeah, that looks right to us. And then we can use it. It's that simple. Then you just have to get 60 days of assets, over to us. No tax returns, again, nothing like that. We just need that one piece of paper, potentially that P&L, and income's done.
Excellent. Okay, and then I think you've kind of covered this, but I want to just kind of hammer it home a little bit. So, FNBA, you guys add value in so many ways. So can you give me some ideas of how you add value over the way other investors do?
Sure. So one of the ways we certainly do is we do not sell our servicing rights. So we buy servicing premium released. We want it all. We want the loan and the servicing, all of it. We have an in-house servicing platform at First National Bank of America that we've been building out over years, right? So we service every single loan we purchase and or originate comes to First National. We service here at First National. So what that means is we do build, real relationships with our borrowers. If you are a credit union or something like that wants to refer or know that we're not going to sell that mortgage, and that mortgage is not going to be traded 7 times, over the next couple of months. That's not how we work, so being a portfolio lender that hits our books, that stays on our books, again, till maturity or until they pay us off. And again, our servicing, I can't really brag about them enough because they do a great job. The loans come in, they service them. We built out the multicultural department, I will mention, because we have been putting, frankly, a lot of, Spanish speaker borrowers on the books. So we've recognized that need, and we've built out an entire department to service that need, right? So we have a plethora now of Spanish speakers bank, which is great to see. We've been growing that out, and that helps with servicing too. I mean, if you only want to speak Spanish, et cetera, we have all those solutions for you as well. So that just adds to this value proposition, right? It's just a unique investor. We're not securitizing any of these loans. We're not repackaging these and then selling off to a different servicer or anything like that. They all come to us, and you're only going to deal with one company, one bank, if and when, we buy your loan or you originate with us.
Okay. Excellent. Well, a follow-up question to that P&L. So are the 2-month assets on the P&L for the business to document the income on P&L, or the assets showing cash to close for the personal assets?
Assets showing cash. Yeah, so the bank statements, in addition to the P&L, have nothing to do with the income. So we're not asking for 2 months bank statements to see if there's enough deposits coming in to kind of mirror what the P&L is telling us, is probably where that question is coming from. So from an ops or underwrite a process, no. Those bank statements will only be reviewed for assets for cash to close.
Okay, excellent. Well, I think that is all of the questions that we have. Thank you guys so much. Thank you to our audience for being here. I know how crazy busy everyone is, so we do appreciate your time. Drew, thank you so much, as always, for bringing such great content to the group, and to sharing First National Bank of America's story. And there was a request for you to send the template over to one of the attendees. So I did take her information down. So I will email you that right after this call. And yes, so as a follow-up to this session, we will have a follow-up email that goes out tomorrow that will include a link to the YouTube video. And feel free to rewatch this. And if you've got any questions, please reach out to Drew and the team over at FNBA. Great partners. We really appreciate you guys being part of the network for TMC, and just really appreciate your time. So thank you very much. Any last comments, Drew?
No, Tony, we appreciate the time and opportunity as always. And, everyone that was able to make the time, thanks for doing that, and happy to continually, educate as we can about the non-QM and how really, easy, frankly, these loans are. And hopefully we can only help moving forward.
Excellent. Great. Well, I know that's a focus in the coming years, definitely. So you guys are well positioned to help that reach out. So thank you very much. Anyway, appreciate it. Everyone have a great rest of your day, and happy Thanksgiving.
Happy Thanksgiving, almost.
Almost. Great. Thank you so much. Appreciate it. Bye-bye.